Good morning, ladies and gentlemen, and welcome to today's webinar, Real-Time Daily Trading Ideas. Today's April the 25th, and just like every day of the week, I am speaking to you from our office in the heart of Berlin. Today we'll be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Before we get started with the actual webinar, we will briefly present the compulsory risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Markus' turn. Okay. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Alright, just like every Thursday, the famous Markus Gabel is going to be speaking to us. I'm handing over the screen to you right now, Markus. I'm ready for some Markus time. Just give me a second. There we go. Markus? Should be able to.
Yeah, of course, I'm ready.
Hi.
It's Markus time. Great, thanks. So here we are, guys. So let's see this one. Wow, so many guys today here. So let's see. I am ready. Okay, thanks for the great introduction. It's Markus time, you know. So let's see, guys, a wonderful welcome to our market overview about Admiral Markets here. And thanks to my great colleague to open this webinar. And let's see, success, guys, is not a fantasy, you know, it's a formula. And this is the trading approach we want to use in our trading. We have a probability of almost 72% if you make sure that the higher time frame is supporting us in any way, like a divergence, like a support, resist, or something, or like a trend at itself. And with that in our mind, that's the rules. Rules, never break the rules, guys. Where you are, rule number 5 to 7, fair value zone, macro profile, big picture, and how we can get into a trade. How, like for rules, trend, maturity, correction, outcoming of the correction, at least 38%, and by a balanced candle. And with that rules, trading at itself, guys, is not a rocket science. It's really easy. The higher challenge, the bigger challenge is taking place in your mind. Discipline, rules, stick to the rules, never break the rules. That's your part. The market to trade to market is not, it's not the big challenge. It's based on rules. Must not be my rules. You can have rules whatever you want, but you have to stick to the rules every time. So let's switch to the market, and first of all, let's start with a running trade in the Aussie Swiss franc. It's a daily chart trade, you know that. This trade encouraged me since February, middle of February, and now we reached our first target. At least last Thursday. Yes, last Thursday we reached our first target after a long damned time, and now after that increase we have a normal correction. So my stop is placed still below the 0.3, below the last 0.3, and now we expect the next correction, but the point of control is placed at 0.73353, and as long as we don't leave that 0.3 to the lower side, a trend continuation is always more likely than a trend break, guys. And that's my most important message to you. The 3 T's: trust the trend. Trust the trend and trust the price. You will be more often surprised how often the price will continue than not. Trust the trend. Marcus, please work with larger candles than okay. So that's the first running trade. Let's have a look at the market at itself, and we start with Dow Jones. And of course, yes, where we are in a trend, and we are far away from the point of control. You see, it's placed 24652 points. We are in the move. Yesterday we had a little bit weak prices, back to the point 26490, and I guess we will retest the last high at 26,952 points. But now we are a little bit in a correction. You see a trend continuation. The last continuation was very weak, and now we are in the last yesterday a little bit soft prices or decreasing prices. But I guess the trend continuation, you know, is more likely than a trend break, and that's the last correction zone between 26590 and 26060 on the lower side. As long as we don't leave the lower side or the green zone to the lower side by a close, a trend continuation is always more likely than a trend break. So, and in hourly chart, of course, you can imagine now. So in daily chart, we are in the green zone. It's the price is very expensive. The fair price is low. So where should we be in hourly chart? We are in the move in daily chart. Where should we? It's a connection of daily and hourly chart. It's always the same. It's the everything is based on the book map, on the order book. So the chart is only the visibility of the book map, no more, no less. So it's completely doesn't matter if you look at the daily chart or at the hourly chart. It doesn't matter. So let's see, where should we be in hourly chart? Yeah, of course, in the green zone as well. So if you are in the green zone in the daily chart, it must be in the green zone in hourly chart as well, because it's the same. You can see daily chart in hourly chart as well with enough history. It's always based on the book map, no more, no less. So where we are. So look at this one. In daily chart, you can see a little bit red candle, and this red candle is visible about the short trend in the hourly chart. You can see here movement, correction, and now we saw, do we have a trend continuation? That's important, guys. If you draw trends, if you see a trend continuation, let's make it a little bit bigger. So I will draw it for you that you can understand my point. So we have movement, correction. When do we have a real trend continuation? Only by a close below, it's a short trend, below the last point 2. We count in start of the trend 1, in a short trend the last low point 2, and the correction point is number 3. Then 2, 3, 2, 3. Not 1, 2, 3, 4, 5, 6, 7. It's the maturity of the trend. Yes, that's a completely different situation. But the low in a short trend, the low is point 2, and the correction is point 3. 2, 3, 2, 3. So, do we have a trend continuation? No, we don't. Why? We don't have a close. You cannot see a close. It's only spikes. That's really important. That's really important. If you see that, they tested the lows in the market. They tried to figure out if there will come more sellers into the market. So if you would have a close, then you have enough sellers and a trend continuation is more likely. But in that case, you see 2 candles with only spikes. So they tried to continue, but they failed. They tried to see if there will come more sellers. So it didn't work. So you don't have a valid trend because it's not a trend continuation because you don't have a close. So what do we have now? Nothing. And if you don't have a trend, no trade. So And if you see the real picture a little bit bigger, you can see, let me draw it for you that you can understand it. So this is the main trend, movement, correction, movement, because you see you had a close below the last point 2. So, and now no trend continuation there. Why not? Can you repeat it? No close. So the last correction zone is placed below the previous point 2 and the last point 3. So, and this one, what you see here, is only not that. I want this one. That was only a corrective down move, no more, no less. It's included in the main uptrend. It's included in that, but it's not the main trend. And as you can see, I have to talk a little bit slowly. And as you can see, you don't have a close, so no valid trend. And everything happens in the green rectangle, in the green correction zone, in a valid uptrend. So be careful about the short trades, because in daily chart it means only a correction. Yes, no trend, no party. So I hope you understand that, how you draw trends in that way. So what should we do now in Dow Jones? Nothing. Wait for the rebounds, and then we can continue the trends to the lower, to the upper side. So let's see gold. So maybe I made an experiment, because I tried with my community to show what will happen if you don't have the support by the upper trend, by the higher time frame. So look at this one. You see it was a loser. First of all, look at the daily chart. So you see that's the daily chart. And when we started this first trend, we were here. So, and you can see, first of all, you are within the red zone, very close to the point of control in gold daily chart. So, and I tell you, every week, week by week, avoid to make trades within the red zone, unless you are with the correction at the point of high, close, low, or point of control. Then you can make a trade. But if you are within the red zone, avoid to make trades, because it's a fair price and you don't have the probabilities on your side. So I showed my community what happened if you work without a support, by a clear support, by the daily chart or by the upper trend. So, and now look at the hourly chart. We don't break the rules. It's only a proposal to have the support by the daily chart, because the probability of a trend continuation without the higher time frame is placed at around about 65%. It's okay to make trades, but you have higher probabilities if you make sure that the higher time frame is supporting you. So look at this one. I will draw it for you that you can follow me. So that was our trend. So we saw movement, correction, then the move, then we had the trend, and then we saw the correction, and you can see that was the balance candle. So every rules were fit. Everything was okay without the support by daily chart. And now you can see, you know, daily chart, we're in the move and try to continue the trend to the lower side, and we are within the red zone. So what happened? We were inside and we stopped out. Very immediately, hours later, we were stopped out. You have not, or you had not, the support by the daily chart. And look what happened after that. So let's switch to the daily chart again. After that, yesterday, we had a support because we saw the balance candle. The movement was over. The market goes back into the correction and try to go back to the point of control. Balance candle. And now what happened in the hourly chart? Look what now happened in the hourly chart. Another trend. So we were able to save that trend. It was not necessary to make that first trade. You didn't have the support by the daily chart. Now you have balance candle back to point of control. Okay, you're within the red zone, but now it's a little bit better because you have the balance candle. The market shows you, okay, we don't go more low. We don't want to go more lower. We want to go back to the point of control. So and now, so you see, that was the trend. So let's see. That was the trend. You see, the balance candle were here, and now go up. You see, now the trend continuation is more likely than the trend break, because now you have the support by the daily chart. Guys, that's so important, and that is one of my rules. It's only a suggestion, it's only a proposal that I tell you. Please make sure that the higher time frame is supporting you by support, by trend, by divergence. It's so much more probably that you have a trend continuation that you can bring your trade into the winner zone, or into into the winner zone. So now we count on, we expect the trend continuation, but we are too deep into the green zone. The point of control in hourly chart is placed. Look at this one, Jesus Christ, $1,310. So many space to go. So wait for the next correction. If you are not engaged in that trade right now, don't jump into a trade. Stick to the rules. Never break the rules. So never break the rules. You see that flower, that it's a cactus. That's cactus, yes, in English, cactus. If you break the rules, I promise you, I give you that cactus in a place where you will feel a lot of pain. I swear to God. If you're my client, and all my clients know that cactus, they know them very well, and I have small, and I send them by post. And if you break the rules, you will know that, I guess. And it's hurtful, I promise you. Learning and doing by pain, that's the most important thing. So guys, that's one point. Let's see some proposals. Silver, I have a suggestion for you. It's silver. So first of all, look at the daily chart. You see we are in the lower green zone, and look at this great support here at this point here. And today we have a balance candle. Maybe it will be a balance candle. So we are in the lower green zone. We have a great support. Use it for daily chart in silver. And now draw the trend. Look at this one. Draw the trend. So movement, correction. Movement, correction. So, and now you see the balance candle here. And now you can get into the trade. Maybe we will see lower prices. We can go into the trade really deeper. The trend will break on the lower side. So that's a great trade chance to reach the point of control on the upper side. So first of all, let's see, I draw it in that way. Movement, correction, movement. And now let's see if we have our rules about Fibonacci. Yes, look at this one. We had a small close below 38%. That's okay. The spike at 50%. That's the balance candle. So every rules fit in that way, so we can make a trade in silver. And the first target is placed, we see 50%. The first target is placed here at the 61, and it's the same like the point of control. So I placed my order already. The stop is placed below the last 0.3, and my first target is placed at the point of control, and then I put out of the half of the position, and the rest run market, run. I never intervene into the trade. I let the market decide how much money I will get from it. But the first target, if I get out the half of the position, I'm safe, out of the risk, and I'm calm. I have my winners on my side, on my account, and then the market should decide how much money I will get. Okay, I have a wish here. US dollar, Japanese yen, of course, I will do that. So US dollar, Japanese yen. First of all, have a look at the daily chart. And who was that? Yes, look at this one. Make sure where you are. Do you have a trend? And where you are about the price. So do you have a trend? Yes, it's an uptrend. Green zone, we are in the correction, but you see about the price, where are you? Very close you are within the red zone, but you're very close to the current price, the point of control. In that case, it makes no sense, because if you come from below to the point of control, it's like a great resist. So wait if you have a close above the point of control, and then we can think to a trend continuation. But at the moment you are within the red zone, and I wouldn't make a trade there. So if you are long positioned in that trade, trail your stop. And if you're short, you have a big problem, I guess. So, and in hourly chart, same procedure. You have actually, you don't have a clear trend. It's up and down. And you see, you are circling around the point of control. It makes no sense to make a trade there. It's a fair price. The market is like barking you and say, don't do anything there. It's a fair price. Look for another trade. It's always a better way to make trades. So like silver, for example, or another trade is Swiss franc, Japanese yen. Look at this one, daily chart. You see, we have in a green zone, okay, we have a short trend, but not a clear short trend. And you see that support here. And now we can use that support in the green zone. We want to go back in hourly chart. And so the first, you see the first, do we have a trend break? Oh, look at this one. We don't have a trend break here. Oh, it's amazing. Look at this one. No trend break. You see this trend is still valid. Now we see the balance candle here. So we can make a long trade here. And the first target is placed, then black to black here, first target, and the rest the market should decide how much money we'll get. So Swiss franc, great opportunity to make a trade for you. Japanese, Turkish lira, of course not. That's not a real, no more, not enough liquidity in that currency pair. Focus on liquidity, guys. Japanese, Turkish lira, oh my God, who should trade that? Maybe some Turkish people or some Japanese, but not the smart money. So stay away from such critical things. Focus on the real trades. Okay, guys, I thank you very much. Oh, Jesus Christ, over the time. It's Marcus time, always over the time. Thanks for your attention, guys, and I wish you a great day, sunny day, and you know my thoughts. Be careful about your thoughts, because they are the beginning of your actions and deeds. And back to my friend, to Admiral Markets.
Thank you, Marcus. I think I'm going to dream about that cactus in the back. That is a very scary thought. Anyway, thank you very much for the analysis. Thank you guys for listening. If you would like to review the webinar, you can do so on YouTube. Thank you very much, guys. Thank you, Marcus. Have a good weekend. Bye-bye, guys. See you again tomorrow.